Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for our 3-day Metal and Mining Conference. Our next presentation is from Sun Summit Minerals. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Neil Marotta, Chief Executive Officer of Sun Summit Minerals, which trades on the OTCQB venture market under the symbol SMREF and on the TSXV under the symbol SMN. Welcome, Neil.
Hi, good morning. Thanks very much for inviting me to speak today to everybody on behalf of Sun Summit Minerals. My name is Neil Marotta. I'm the CEO and Director of Sun Summit Minerals. And I'm going to walk you through today why I was so excited to join the company back in January, what we've got planned ahead for 2025, and why we think this is a really fantastic opportunity and a great environment to be investing in junior gold companies such as Sun Summit. So thanks everybody for joining us. We are listed on the TSX Venture and also on the OTCQB. I'm going to make some forward-looking statements and I'll give everyone a chance to review these notes at their own leisure. Whoops. Excuse me, and get this back. There we go. So our projects are based in British Columbia, Canada. All of our projects are in Canada. And if there's three takeaways that I hope everyone takes from today, it's number one, that we are a deeply undervalued company. Our current pre-money market cap, pre-financing market cap is somewhere around $6 million. And so if you look on a valuation per ounce, it's very compelling. Number two, our assets are in very safe jurisdictions, all being in Canada and in British Columbia, and we're fully permitted to go ahead with the work that we've planned. And number three is that we are fully funded for our drill program this summer. We're in the midst of a financing right now that should close in about a week or two. We expanded that financing from $3.5 million. It was oversubscribed, and we upsized it to $10 million. I can count on one hand the number of times in my career and my 30 years in capital markets where a deal's been upsized that much. And so we're very pleased with the reception from investors. And I'm going to get to all the plans that we have for putting that capital to work to generate value for shareholders. But first off, again, these are our two projects, our JD and Buck. JD is the project that we're going to spend most of our capital on this year. Buck is a project that we put some work into over the last few years. We did put out a mineral resource estimate a couple of months ago, about 800,000 ounces of gold. And so you can see we're trading at below $10 an ounce based on that resource estimate. And all of the upside at JD comes for free. As I said, our market cap is now about $6 million pre-money. And we are going to close on roughly $10 million in the next week or two. That absolutely fully funds our drill programs and infrastructure development through 2025 and leaves us enough hard dollars to fund the company well into 2026. So we're in very, very good shape financially right now to accomplish what we want to do. I'm going to walk through a little bit the thesis on gold before I get into the detail about Sun Summit and about the projects that we have. And hopefully you'll come away with the same enthusiasm I have, not just for the gold price and gold equities, but for Sun Summit. Moving on here, gold price obviously has been a fantastic bull market for more than 20 years now. Not all in a straight line every day, but that's how these things work. And the primary driver of higher gold prices, in my view, has been negative real interest rates. Back in the 70s, we had deeply negative real rates, and gold ran, from under $100 to over $800. And since 9/11, which is when I turned bullish on gold, the gold price has gone from under $300 to almost $3,500 a couple of weeks ago, and today we're back over $3,300. And that was driven primarily by negative real interest rates. I think we're probably in a situation right now where rates will have to go lower, and we can talk a bit more as to why. And so I think real rates are probably going down, not up. Central banks have also been huge buyers over the last few years, and really since 2010. That is a big switch. Central banks were sellers in the 90s and in the first decade of this century. And so that buying has been supported. And what we're seeing in the bottom right corner is gold going up for the last several years against all currencies. And so that's very, very bullish. In many cases, people look at gold as a strong inverse relation to the US dollar. But when you see gold rising in all currencies, including against the US dollar, that's extremely bullish. Moving on to the next slide here. I won't spend a ton of time on this, but I think this is really the reason why rates probably need to come down. The U.S. fiscal federal debt is approaching $40 trillion. Annual deficits are close to $2 trillion. 100% of the tax base goes to the social programs, defense spending, and debt service. And it's probably worth pointing out that debt service in this number was under $1 trillion. And when you look at where the yield curve is today, and you look at where the total federal debt is going based on further accumulated deficits, that debt service number will have to go up, right? I think the 10-year today is between 4.2 and 4.3, if I'm not mistaken. And so as the debt continues to climb and rates stay stubbornly high, as the U.S. goes and refinances all of this debt over the next several years, you're going to see that debt service number climb to the point where it may actually become, in the next couple of years, the highest single budget item. And that is very bullish for gold, in my opinion. Looking now here, gold has absolutely outperformed the S&P 500 since 9/11. That may surprise some folks, but it is true. Very, very, very interesting to see that outperformance. And yet, over the last 20 years or so, what the top charts on the right show is that the equities have underperformed the gold price. And there might be some good reasons for that. Mining is a capital-intensive business, and we do see cost inflation over time. But what we see, and if you look at the bottom right corner, and my thanks to Crescat Capital for publishing this chart publicly, the margins that the senior gold producers are making now, the cash margins per ounce have never been bigger. And in fact, even this chart is a little outdated, with gold some $400 higher than the $2,900 level in this chart. So margins for some of the bigger companies are approaching $2,000 an ounce. For those that are below industry average cost, now they're north of $2,000 an ounce. The gold price itself was not over $2,000 an ounce until about a few years ago. So this is record profitability, while at the same time, and this is key, the junior gold stocks, including Sun Summit, are trading well below replacement value. So this dislocation must end somehow. And I'm very bullish on gold. I think the equities are going to start to perform. I think the generalists, general investors, and the generalist investors will come back because of the free cash flow that these senior gold mining companies are going to generate. And then ultimately, it's the junior gold companies trading below replacement cost, which really means it's cheaper to buy ounces than to find them. I think you're going to see a wave of consolidation. The large players in this industry must continually replace their reserves, and acquiring juniors below replacement cost is a fantastic way to do it, where you're mitigating your risk and actually saving capital. So this is a perfect environment for junior gold stocks here. And I'm going to refer to what's called the Lassonde curve. Most of you who are familiar with the gold mining industry will know Pierre Lassonde, and this comes from his writings from many decades ago. There's two real ways to make money on gold equities. Number one is in the early discovery stage. That's where Sun Summit is. You can add a lot of value with the drill bit. The other way is to actually get into production. And typically what we see in the middle is this valley where you're bogged down in permitting and environmental studies and feasibility studies. And it tends to be a little bit more like dead money than an exciting move higher. But where Sun Summit sits right now really is in this part of the curve, in the discovery part of the curve, where really you're finding gold in the ground with the drill bit. And the more gold you find, the more value you're creating, and the stocks tend to follow. And so that's the exciting part that we're in the cycle right here. What we plan to do this year is over 5,000 meters of drilling at JD. And we'll also do some IP and geochem analysis as well. So that is an important note, twice as much drilling as we did last year on JD. So our knowledge about the deposit is going to expand pretty dramatically. That's important, not just for our future drill programs and creating value for investors, but for the many large companies that, as I referred to in the previous slide, are actually looking at Sun Summit now. We're increasing the database so they can have a good idea, and helps them build their block models and understand what our deposit entails. Okay, so specifically, where are we with JD? This is in an area that we call the Golden Horseshoe in the Toodoggone, way up in north central British Columbia. These are the same rocks as the Golden Triangle, just on the other side of the basin. The Golden Triangle is, I think, had a lot more money put into it over the years. The Tutagon is, I would say, underexplored, not underendowed. The rocks are just as good as Golden Triangle, but this area is a little bit more remote, and there's been a little bit less work done. That is starting to change. And I'm going to go right to the next slide here to talk about this. We've seen a huge amount of corporate activity in the area in the last few months. Many folks know that Hunter Dickinson and Freeport already have a joint venture with a company called AMark. They had some terrific results back in January at their Aurora project. Since then, we've seen Skeena invest $7 million into TDG, our neighbor to the south and north. A couple of weeks ago, we saw Freeport enter another JV and take an equity position in a company called Finlay, our neighbor to the east. And a couple of weeks ago, almost like a cherry on top, we saw Centerra Gold, which is the largest past producing project in the area, take a 10% position in our neighbor immediately to the west, which is Thesis Gold. That was a $24 million position, valuing Thesis at $240 million. And again, our market cap is now $6 million pre-money. So that's where we're going. If we're standing on the T box, then the pin is where Thesis is. They've got between 4 and 5 million ounces and a PEA in place showing a very robust project. We're very confident that we have a multi-million ounce deposit. It's going to take some time to drill it out and some capital, which we now have. But over time, as we grow the resource base that we have at JD, this patch right in the middle here, and I'll get into some detail about the project, that will create value. And to go from a 6 million market cap to a 200 million plus market cap like our neighbor to the west, that's going to create a lot of value for shareholders. And so we're excited about the drill season we have planned for this summer. Our total land package in the area is 25,000 hectares, 15,000 at JD, and 10,000 more hectares on a project we recently optioned called Theory. It's worth noting that the three companies that I discussed, TDG, AMark, and Thesis, all have market caps north of $100 million, I think further demonstrating the value creation that's ahead of us. Okay, drilling in specifically here into the JD project, this is what we call the Creek to Fin corridor. Just for those that are following along, that's this tiny little spot here on the map that we're zooming in on now. And this corridor is very interesting. We've done, last year was our first year drilling this project. So JD was a project that that Sun Summit optioned into in the beginning of 2024. Drilling there is quite seasonal, really goes from July through to October. And so that's a short season, and we've only had one drill season. Last year, we did 2,500 meters of drilling at Creek and at Fin. And it's worth noting, too, there's quite a bit of historic drilling in the Fin zone as well. And all of that data is valuable in terms of building our own internal block models, understanding what we have, what the potential is, and what our drill targets ought to be for the year. So our plan is to drill 5,000 meters. That will be about 25 holes, and that will be at Creek and at Fin and some targets in between as well. We also received a 5-year exploration permit on April 2nd. So that's great news for all the hand-wringing about permitting in British Columbia. We've been very successful, and we have a very long-term permit in place. This permit also allows us to rebuild our camp at JD, which is important in terms of having an economical area for folks to stay while they work in the area without necessarily having to rely on the kindness of our neighbors. And further, this permit that we have in place allows us to build a 6-kilometer road up to the Fin zone, which will do two things if we go ahead and do complete the road. First, it will lower our helicopter costs. So drilling in this area is a little bit more expensive than average because it requires helicopters to move the drill rigs around. Number two, so putting that road in place will help defray much of that cost. Number two, having that road in place will actually extend our drill season. And it's not necessarily because of snow, but because of the ceiling. And so it gets tricky to reliably use a helicopter to fly the rigs around late in the fall. So adding that road may actually double our drill season from July. Instead of it ending in October, it may go all the way to December or January. And so that's very positive. So we're very pleased with how the permitting process has gone. Moving in a little closer here on JD, this 4-kilometer Creek to Fin zone, you can see all of the soil and rock samples that we've sort of taken in between. It's a very high-grade multi-ounce sampling. So this is a prolific area. There's lots of smoke here. There's no shortage of drill targets. and we're very pleased with the grades that we're seeing in the area. Looking at last year's drilling at Creek, the best hole that we put out was hole number 4, 122 meters or 2.1 grams per ton gold from surface. That's a fantastic drill hole. That would have been a great drill hole $1,000 ago on the gold price. So we're very pleased to see a good grade. It's worth noting some of the majors now have average reserve grades below 1 gram per ton. I can remember earlier in my career where reserve grades of a gram per ton were not economic, and here we are at today's gold prices. That's very good. So two grams per ton or higher, that's fantastic grade. And the fact that it's near surface as well, that's very positive. We've also identified these chargeability highs. So we have a gold-silver epithermal system. We're a gold company, and that's what we're chasing. But beneath it, we think there is a copper-gold porphyry that relates to this northwestern trend in the area. But that is not where we're going to focus our drilling. Just pointing that out for general awareness. Here we are on the east side now, that 4-kilometer zone called the Fin Zone. There are almost 300 historical drill holes there that we do have the data for, and we have logged and have built into block models. And so again, you can see very good grade and mineralization right at surface, which is what you want to see. So very excited about the project and about what we're going to do this year at JD. That should all the drilling that we do at JD will drive news flow through the end of the year. And so the drilling that will begin in July will probably see results come out in October, November, December, possibly as early as September. And so, you know, this is really, we're entering a great time here, I think, to be investing in Sun Summit, where it'll be cashed up. Our drill program is funded. We have a very robust drill program planned for the year, and that should drive news flow, which will be a good catalyst for the stock through the fall. If you look back at 2024, when we released this fantastic drill hole in the Creek Zone, the stock actually ran to 34 cents. We're back down at 7 cents today. But, you know, obviously it's great to see good news like that driving the stock higher, and that's what we're hopeful for in the fall. Just to review Buck one more time, this is our second project. Again, we have about 800,000 ounces of resource here, gold, a little bit more gold equivalent. This is in an area that's seen all kinds of past producing. It's in a very good area. It's a 52,000 hectare property with all year-round access and road access and good infrastructure. So we're not sure exactly what's going to happen with this property. It is no longer the focus of the company, but this asset might be interesting to others over time. And as I said, you can value the company on a per ounce basis based on what we have at Buck. We have a deeply experienced team. My background's all in capital markets. I previously managed the Select Equity Gold Fund for Fidelity Investments, amongst other sectors. Our chairman, Brian Locke, has been in the mining industry for several decades, and Bob Willis, our former CEO, remains on as a valued advisor, somebody I speak to very regularly and use as a resource. And our technical team, Ken McDonald and Chris Leslie, are deeply experienced. Ken lives in Prince George, was formerly working with the ministry, and certainly knows his stuff and knows the area very well. Chris Leslie was a pit geo at Kemess, one of the bigger operations in the area about 20 years ago, and actually also was CEO of a company that had the JD claims at one point about 12 years ago. So he knows the area extremely well, and I think we have a great team. We're in great shape to make great progress this year with this group. Our share count now is about 90 million shares outstanding basic. Post financing, I would expect that number to go up quite a bit to about 200 million. Again, our market cap is below 10 million today, and we're raising about $10 million. So we're very pleased with that result, and look forward to putting that capital to good use. The last thing I think I would point out before I move to Q&A is the nature of the JD earn-in. So we have 5 more years to spend a total of $20 million to earn into 100%. As I said, we're in the process of closing a $10 million financing, which has all been publicly announced. And so that'll help us chip away in a big way towards earning all the way into 100%. And I'm fully confident that we will have the capital to earn into 100% on this project. You know, we're optimistic about the results that we're going to get this year, and we think we've got a terrific project here. So I think with that, I'd like to thank everybody for their time today and for joining me and listening to the Sun Summit story. It would be my pleasure to turn it over to Q&A, please. Okay, I think we've got some questions coming in here, and I'm just going to take them one at a time. Bear with me here, please. Okay, so question is, what is the infrastructure for your JD project? Do you have a projected all-in sustaining cost? Thanks for the question. The infrastructure in the area, I think, is decent. I'm going to flip to this slide and just try and talk about it a little more succinctly. Just bear with me 1 minute. So this down here is the Kemess mine, which was previously operated by a company called Centerra Gold. Timing is perfect. Today, Centerra put out a press release giving a resource update on Kemess, also talking about expanding their exploration budget and doing a lot of drilling here. And so there is good infrastructure in the area. There's power, there's water, and there's roads. And that was primarily from the past operation here at Kemess. As far as JD goes, there's roads close to site. We have the right to build the road on site, which will be helpful. And there is power in the area. So the infrastructure is good for mining in the area. In terms of all-in sustaining cost, I think it's just a little bit early for that. We have not done a preliminary economic assessment or any kind of feasibility study yet. But when you look at our neighbors to the west at Thesis and the all-in sustaining costs that they have, presumably our grades will be in and around the same area. And so I think you can use that as a decent proxy. Next question here is, what are the catalysts for a re-rating of Sun Summit? Thanks, great question. I think the re-rating is twofold. I think number one, it's creating value with the drill bit. So I think the more drill results we get that point to having a multi-million ounce deposit on the property, I think the more attention the stock will get generally. I think also at some point, these stocks have to work with gravity, not against it. And it's at some point the stock will go higher based on drill results and proving up that there's great mineralization in the area. I think the other part of that story, though, is industry related and somewhat out of our hands. I guess that I would almost reframe the question and say, when will the junior gold equities achieve a re-rating? And that's much tougher to say. Gold is pretty quietly gone from 2,000 to over 3,000 an ounce in the last 12 to 18 months, which is an absolute fantastic run. Probably one of the biggest dollar runs we've seen in the history of gold ever. And yet many of the junior gold stocks are not participating. I think that's a combination of maybe a perception that there's a lack of capital out there. I don't think that's true. I think our financing being upsized to 10 million proves that for the right project, you can raise capital in this environment. And I think the other part is that we've yet to see consolidation really kick off. And that's not to say that it won't. I just don't think we've seen it happen. We've certainly seen good corporate activity in the area. And I think the cross current of us being in the middle of financing, I think, has kept the stock from rising on the back of that news. But I think going forward, based on the capital that we now have in hand and the drill program we have, I think moving through to the end of 2025, the potential there is for a re-rating based on the results we get and based on industry factors. Moving on to the next question here. What are your key milestones to the end of the year? Great question. I think number one, we need to complete the 5,000 meters of drilling. And in my mind, that's a minimum of 5,000 meters of drilling at JD. Ideally, that will result in some great discovery holes. Our goal is not to just infill this deposit. What we'd like to do is continue to expand this deposit on strike and increase the footprint. And so we're chasing discovery holes here this year. And so 5,000 meters of drilling, that's important. I think another key milestone for us would be to increase the scale and size of the project and have, let's say, some incremental discovery holes that create more excitement for the project. Beyond that, I think there's some softer goals, but not any less important. I think number one would be to continue to engage and consult with First Nations groups in the area. And I think, let's say, there's an outside chance that we look at something strategic down the line based on the results that we do get. I wouldn't call that a milestone so much as something that could happen based on our results. I think I'd leave it there in terms of what our milestones are for the year. Okay, I'm not. Oh, hang on a sec here. Did we get one more question? Okay, good question here. Question is, when is the financing expected to close? We were initially targeting May 15th, and I would still say that's likely the date to close. If it slips a couple of days here or there, that's that. But contemplated to close at May 15th. We're in and around the $10 million number now, which was what we upsized it to. We do have room in the financing. We have an over allotment option that would allow us to take down $11.5 million. So for those that are interested, please shoot me a note. And yeah, this is we're very pleased with the result on this financing. Very happy that we have the capital put to work and create real value here at the JD property. Okay, I'm not seeing too many more questions here, but happy to stay on the line if anyone has any further questions. Okay, well, I don't see any further questions, so thank you to the audience. Thank you, everybody, very much for taking time out of your day to listen to the Sun Summit story. I think we've got a very exciting project here, a lot of corporate activity in the area, undervalued stock in a very safe jurisdiction and a very hot district with lots of catalysts coming in the fall. So at the very least, I would encourage you to please put it on your watch list. And again, thanks everyone for your time today. It's been my pleasure.